Hey there, welcome to Snowpal's Polyglot Software Development Podcast. This podcast is not about software. A majority of our podcasts, an overwhelming majority, relate to software development, as you know, but not all of them, right? We've had conversations with guests who show up at our podcast where we go outside our comfort zones, if you will, and talk about, running a business, the challenges of running a business, entrepreneurship in general, finance topics, some economics as well. So we try to cover the gamut, even though our focus is predominantly in the space of software engineering because we are a software company. We sometimes challenge ourselves and just get out of our comfort zones. Along those lines, this topic is very much outside my comfort zone. It's about tariffs. Now, it's been in the news in the last week or two, perhaps even 3 weeks, if I'm not wrong. So there's a lot of chatter about tariffs, and there's a lot of curiosity as well. But as I talk to people, I don't know much about it. I'm going to have a disclaimer shortly, but I've noticed that I've had conversations with folks who are a little uncertain about what tariffs are, what impact they might have, and I felt like there are some answers that I thought I had, and the people I'd spoken to perhaps were unsure about some of the things. At least I think I'm sure of. So long story short, I figured it's worth creating a podcast on this, sharing my 2 cents. But before I get started, let me just have a quick disclaimer. Now, I'm not an expert in anything for that matter, but certainly not in this space of tariffs. I'm just curious, just like everyone else is, and I have some uh, thoughts and maybe some awareness about tariffs. And I've done some amount of reading as well. So that's what I'm going to go with. So whatever you're going to hear or see or watch in this recording, it's simply my understanding of tariffs. So it's up to you to check, verify that it actually makes sense, or if I'm saying something wrong, feel free to add your comments. That way, other people can learn from your expertise as well. So I'm just going to share my 2 cents. Hopefully, the most of it is accurate. But where it's not accurate, my apologies. It's not intentional. It's just ignorance more than anything else. And most importantly, this is an apolitical podcast, right? I mean, I feel like I have to make a mention just because of this topic and the context in which I'm creating this recording, in the early part of 2025. So it is apolitical. I am no expert. I'm the last person who can make a judgment on whether it's right, wrong, or it should or shouldn't be done. I know everyone has an opinion. I honestly probably don't even have an opinion on this topic. But regardless, it's apolitical. It's just simply to share the idea of tariffs and what they mean. It's not to call out for whether I agree or disagree with what's happening in the current macro environment. Just to be very clear. So with that being said, let's just jump into the topic, and then I'm hoping I'm connected to a lot of people who know a lot more about this and everything else. So if you're, I know I'm connected to a lot of professors and pretty good schools who may even be teaching the subject. So please, if I say something that's not quite accurate, please chime in, add a comment, and I'll be sure to thank you for your contributions. Okay, let's get started. I'm going to do a screen share here. Um, Let me share my screen. And while we do this, we're going to be looking up, online, just trying to get help and references and all that kind of stuff. Uh, just to be clear, I don't know all of these answers. I have an idea, but I'm going to look up Google and maybe ChatGPT or one of those innumerable tools that we have at our disposal these days. So let me make sure the share looks all right. Okay. Let me. Okay, here. So tariffs. Maybe I should make it plural. Um, let's go. I just made a list of bullet points just to help jog my memory of these topics, and then we'll see where this takes us. And this is, to be very honest with you, it's very much outside my comfort zone. I enjoy this topic. It's just not something I've had a chat about prior to this. This is the first time. So let's get started. What is a tariff, right? That's the first thing, right? I mean, for a lot of you might know some of this or all of this, but I'm going to assume that you may or may not know this. I'm going to repeat some that might end up being obvious, so just bear with me here. What is a tariff? A tariff is essentially a tax imposed by government. I'm just looking it up and reading that line out to you, and then we'll talk more about it. So a tariff, I just googled this. A tariff is essentially a tax imposed by a government on imported goods or services. So that's what it is. It's essentially a tax. When you buy a product at the store, you're paying a sales tax. Depending on the state you live in, you might be paying 5, 6, 7, or 8%, somewhere along those lines, right? In terms of those numbers, that's like a sales tax. This is a tax that, we'll get to it slowly but surely, but at the highest level, it's a tax imposed by a government. So in our case, as we, as someone who lives in the US, a tariff for me is a tax imposed by the US government on imported goods or services. So goods coming into the country. The description here says, now I have a lot of questions myself, to be honest with you. So as we go through this, let me make sure hopefully my camera is turned on. If not, it's all right. Um, as we go through this, I have plenty of questions. I'm going to share these questions here as well. So if you came here looking for answers, sorry to burst the bubble. I don't have all the answers. I have a lot of questions though. So hopefully it provides, sets a foundation for some more other collaborative podcasts. So if this podcast does end up picking your interest, then hit me up and we can have a continued conversation on this topic. Okay, so what is tariffs? What are tariffs? It's a tax imposed by the government on imported goods and services. Now the thing is, it says goods and services, but from what I've seen, it's predominantly, at least it's physical products coming into the country. I mean, from what I can tell, there don't appear to be tariffs on non-physical products, like services. Even though the description here when I Google it says services, so that's perhaps my first question. Maybe I should even jot down these questions, but let's keep chugging along. Because software exports, let's say India exports software to a lot of countries, and US being probably one of the largest exports, if I'm not wrong. But I don't believe the tariff is applicable on those services. So it's only the products, as far as I know. But uh, that apart, it's a tax on goods that are imported into the country. Now, I have a bunch of questions here. I may or may not go through them in sequence, but I'm going to try and go through them in sequence as much as possible, right? Uh, we'll kind of come switch back and forth because these are all related questions. I'm not sure if I'm going to categorize them as I've listed it here and answer to them separately and specifically. So it's going to be a collective set of questions and answers, I reckon. So who pays it? We'll go to will it affect me in a second. What is a tariff and who pays the tariff? But before we go to who pays it, so tariff is an import duty, as I've said more than once already. It's collected, again, this says it says that the tariff is collected by customs officials when goods arrive at the port of entry, right? Wherever it's imported, it's coming into, say, LA or New York, Washington, DC. I guess it's charged at that point, is what I understand. And who pays for these tariffs? Now, that's a pretty broad question. Let's start with a simple answer and then go from there. The first person who pays for it, right? Not just the only person who pays. Typically, I would say the first entity that's paying for these tariffs is the company that's doing the importing. So if you are a company that's importing products into the country, you would be paying those tariffs. And what those tariffs are, the rates, depending on the country and whatnot, we have a bunch of other bullet points here. We'll get to them slowly. But you are the importer is the one who's going to be paying for those, paying those tariffs. That's simple. Now, that's a simple answer, but it's more complicated than that. So let's keep chugging along here. Now, let me bring this window. I'm struggling to get to the window every time. So let me move this here. Okay, who pays it? Let me write importer of the product paid at point of entry. What is it? It's tariff is an import duty charged by the government on imported goods and I'm going to write goods and services, but I think it might just be physical goods. Yeah. Okay. Okay, let's keep going. What is the next bullet I have here? Who pays it? Again, we're going to go run through them quickly and then we'll come back and have sort of a monologue slash type of a conversation around it. So just recap as we go. Import duty charged by the government on imported goods and services. It's paid by the importer. So the company that's importing the products is going to pay the tariff, and it's paid at the point of entry. Will it affect me? Let's let's skip that and come back to it in a second. Right? We'll come back to the question. There's a lot of specific questions here, but before I go to the specific questions, let's answer the basic ones. It's been in the news in the last 2 or 3 weeks with all the conversation around tariffs, which is why it's an interesting topic, at least to me and a lot of other people. Let's see, how is it? Is it the same rate for all countries? Now, again, I'm talking about tariffs in the context of somebody living in the US and in the context of things happening right now. So some of this is generic to tariffs as a line item, but a lot of other things that we're going to talk about here are probably specific to the US. So if you're watching this or listening to the podcast from some other part of the world, just take what I say with a grain of salt there, because a lot of what I'm saying here, even if I don't qualify it, it's going to be from the perspective of somebody who's living in the US and is subject to news and everything else around this topic currently. So is it the same rate for all the countries? No, it is not, right? I'm going to pull up an article that I found on New York Times. Okay. So this actually has a list of all the rates. Again, these numbers have changed every so often in the last few weeks. So I don't know. We can look at the date of this article when it's dated. But again, take that again as an approximate number. These numbers are very fluid. They change on a daily basis. But these were the numbers as of the time this article was written, which I don't know. Maybe that doesn't have a date here. That's interesting. Okay. So these are the tariff rates. The trading partner is essentially the country. New tariff is the additional percentage, because historically I believe there have always been tariffs. There's a certain rate that's been charged to pretty much all the countries or most of the countries. Maybe there are some countries that are exempt from tariffs, but in general, so it says plus because those are the additional rates that are being charged right now. Now, let me go back here. Okay. Sorry, I just want to switch gears for a second, but let's complete this. So the first column is new tariffs, share of U.S. imports. In other words, if U.S. imports, the sum total of this should come up to 100%, I reckon. So this is everything that the U.S. is importing from other countries, and this is the percentage share of U.S. imports. And then there is something called the good trade imbalance. We'll just talk about that as well. Now, trading partner is the country. Other countries are a set of countries like European Union, China, Japan, Vietnam. It's sorted by, I guess, the share of U.S. imports. When I saw this, it caught my attention because I always thought that the maximum imports into the US came actually from China. And according to this, it's not China, but it's EU. But I looked up some other article. It appears to be China because I actually did a Google search to see how much we import from China. I believe US imports from China percentage. It says accounted for approximately 13.4% of all goods imported, which is actually true. US imports from China, dollar amount. But I thought I saw something else. US imports from China versus EU. The US imported more goods from China than the European Union, but that was in 2022. Maybe that changed in the last couple of years. I thought there's a pretty big gap there with more coming from China. That doesn't appear to be the case, but I've seen some discrepancies in articles I've read here. But let's just go with this. 18.5% of all US imports come from the European Union, from across all of the countries in Europe. And the next highest is China, 13.4%, and then goes down to 4.5%, and then all the way there India is here at 2.7%. Now, again, the tariff rates plus 20% plus 84% for China, and I believe the number is higher right now. At least the last time I checked, Japan is 24%, and then you can see all of these numbers here, right? It's. I believe the flat rate, as I understand it, is like an additional 10%. And then on top of that, you have these numbers. I don't know if this includes the base 10% or not, but that's kind of the approximate number. Share of US imports, we talked about it. So as you can see here, right, most of the imports come from the European Union and China, some from Japan, Vietnam, Korea, essentially Southeast Asia, and then South Asia, India, and then that's about it. But the rest of the world is like less than 1%. And if you see the numbers, they are dwindling down. It's very, very small. So it's essentially the most, this is the percentage, but if you did the percentile on the good straight balance, it'd be nice to see what the percentile is of the total amount of imports. Let's actually check US total imports in dollars. It says 3.96 trillion US imports with around $4 trillion. This number is nowhere. It's 305, 6. Yeah, I don't know. It doesn't look like it's going to add up to that, but maybe all of this less than 1%, maybe all of this does add up. I don't know. I'm just trying to do a quick, trying to look up these big numbers, and it didn't look like it was going there, but maybe it does. I'm sure it does. So $241 billion. This is the trade balance, and we'll talk about what that means, right? Actually, this is not a bad time to talk about trade imbalance. Um, but maybe not. Maybe not. Let me. I'll take that back. Let's go back to what we were looking at earlier. Is it the same for all countries? The answer is no. It is. It's specific. It varies. Um, there is a base rate that is applicable to all nations. Additional rates are country specific. I think that's good enough. Yep. Okay. Let's go. How is it? Okay, next. Oh wait, did I put it in the wrong? It's the same rate for all countries. Oh yeah, I only had these bullets listed here. Let me actually change that. Okay, how is it calculated? And now that we've seen the actual numbers, let's see how the tariffs are actually calculated. I think I had I don't know if I have an article to pull up here, but here is what I understand. The way the tariffs have been calculated, um, at least, take this with a grain of salt. This is based on, I don't know if there's a direct answer, but this is what I understand. It if a certain tariff, let's say we looked at 84% tariff to China, and then what was the number we saw for EU? It was like 20%, right? So it's basically three bullet points from what I understand. One is the tariff charged by the other country, right? So essentially, if the other country charged 10% tariffs, we charge them 10% as well. And then there are two more metrics that is a function of three items essentially. Tariffs charged by the other country equal, so it's 10%. They charge, we charge 10%, something along those lines. And then there's two other items that are very subjective: trade imbalance and currency manipulation. Now let's look at trade imbalance. Trade imbalance is what this, when we were looking at the chart here, shows goods trade balance. The negative number, what does a trade imbalance actually mean? It means that you are, as a country, if you're actually, let me say this correctly, if you're importing more than you're exporting, right? Let's say we take the US imports. What are the US imports from China? As we saw the number here, it was like actually we saw the number earlier. Let me go pull that one up. US imports from China in dollar amount. In 2020, that's too old. Let me say 2024. It says US total goods trade with China were an estimated $582 billion. US goods exports to China were 143 billion, right? So in other words, uh, we exported goods worth 143 billion dollars to China, but we imported goods worth 582 billion dollars. So if you do the delta, again these numbers, the delta comes up to a little bit over 400 billion dollars, but I see the negative there as like just shy of 300. So again, the year could be different, things could be different, but that's basically what I believe it is. How much do you import from a certain country? Say you import $100 worth of goods, and then if you're exporting $20 worth of goods, then the trade imbalance, as I understand it, is $80. That's basically what it is. So when the tariff is actually calculated in this formula, it's essentially saying it's taking that into account, trade imbalance. So if I'm importing a lot more from that a particular country than I'm exporting to, then I'm exporting, that it basically means there is trade imbalance. Now, there is bound to be trade imbalance. We'll come back to that in a little bit, hopefully before the end of this podcast. But that factors into this equation. Third is currency manipulation. Now, what is currency manipulation? I just looked this up to put that in action. I'm going to read this out verbatim, or maybe not because I think it's too verbose here. But so currency manipulation refers to a government's, let me start by reading verbatim and we'll go from there. It refers to a government's actions to artificially influence the exchange rate of its currency, typically to make its exports cheaper and imports more expensive. Now, if a country makes their exports cheaper, then it's going to be, other countries are going to want to import from that country because the products are, the currency uh, it becomes more affordable, right? In other words, when you manipulate the currency, the exports become cheaper, so other countries would want to import those products from that country essentially, and their imports become more expensive. Now, this can happen, I believe, organically or naturally, but other times it could be coerced and be done, and that's when I believe it's called currency manipulation, because there are probably a number of different ways where the currencies can change. That's a different topic entirely. So but when they say currency manipulation, it means it's done artificially to lower the value of a particular country's currency. So you actually make your exports more attractive, so other countries can actually import from you. That's basically what it is. The weaker currency makes it cheaper for folks who are buying for companies or industries, not industries, companies, foreign buyers essentially. It becomes attractive to them, but that's called currency manipulation. So from what I understand, that the reason behind the additional tariffs was threefold. One is essentially the tariff charged by the other country, the trade imbalance as we saw earlier, and then the currency manipulation. Now, whether you agree or disagree with these items and whether the approach and the formula, there's a lot of chat around it. That's not for me to call out here. I don't know. I'm just saying what I believe is what seems to have been factored in before for it to have been arrived at these actual numbers essentially. That's what it means. Now at this point, I think it's a good segue to talk a little bit about some of these items. The tariff charged by other countries, right? Now by other countries, by the country, yep. I mean, I don't want to go into what these are, but let's just let's just take one more. Let's just look at one more article actually. uh, Let me pull this up here. You've probably seen the TikTok videos and Instagram videos that talk with the Chinese manufacturers coming out and talking about the European expensive high-end luxury goods and that they're made in China and all of those. Now, again, why do I bring up something that seems unrelated? It's because it brought it was fresh in my mind. I'd watched some of those videos earlier, and some of what we're going to talk about probably is going to relate to it in some form, way, or shape, I reckon. Uh, so let's take this article. How much are tariffs on again? Apolitical. I'm just pulling up New York Times because that's the paper I read. Now, there are other places. If you think that's biased source of reporting, just look up something else and you can draw the parallels and compare and contrast. Pick the news source that you like and you trust. Essentially, I'm just picking one that I trust. How much are tariffs on Chinese goods? It's trickier than you think. This actually was to me a very interesting article. Because it actually goes into a lot of details, and the way it's laid out is it goes into a different let me actually go here. Yep. So it says, there's a base rate, a standard tax rate applies to imports from all over the world. I believe that number, as it says, is 3.4% on an average. And then there were pre 2025 protectionist tariffs, right? So tariffs that had been in place prior to the beginning of this year. Now, the new tariffs under President Trump's second term, that's what it's listing it here: steel, aluminum, and auto tariffs. Some of them are called the fentanyl and reciprocal tariffs. It's in quotes because that's kind of the rationale behind what those tariffs are. So this is on the type of product. Other one is the rationale or the reasoning behind why those tariffs are in place to begin with. That's probably what explains that separation there. So it says 25% on some steel products and aluminum products and some cars and car parts. And then it goes into great levels of detail here. That is a base rate, pre 2025 tariffs. And then this yellow or maybe light brown, whatever the color is, steel, aluminum, auto, and then finally this orange is the fentanyl and the reciprocal tariffs. Reciprocal is what they charge, we charge is essentially what it is at the highest level, but it is a bit more complicated than that, from what I understand. So there is these numbers again, as you can see, it's specific to the product. So if you're an importer who's importing toasters, you're paying 150%. But if you're importing laptops, you're paying 20%. And again, that number changed as well, because I think a few days ago, there were much higher tariffs on certain products like cell phones and semiconductors and chips and whatnot. But I believe those have been exempted. So Apple as a company would stand to benefit from it, because cell phones, their iPhones wouldn't be subject to those tariffs. So as you can tell here, right, the tariffs are very, very specific. They're specific to a country. They're specific to the type of product that's being imported. They're specific to industries. They depend on a lot of things. It's the relationship that happens to probably exist between two countries. So a lot of that plays into that. But essentially, it's specific to a country, specific to the industry, specific to the product. As you can see, within a given industry, things could be quite different. So there's a number of nuances and factors that play a role. So if you're somebody who's importing toys and dolls and puzzles, you're paying 145% tariff. Children's books, there's no tariff, 0%. Car wheels is 73%. So how it impacts you depends on whatever it is that you're importing. Now, I think this is a good time to go look at. Let me collapse some of what we've discussed already, or the ones we've not yet discussed, just so it's not too noisy. Will it affect me? I think so. Now you're going to say, hey, why would it affect me? Oh, every time I do that, I guess it expands the rest of them. That's all right. I'm just going to ignore it. Um, why? Why do I think it's going to affect us? Now, again, it depends on the type of product. So let's go here. I don't know. Let's take laptops as an example. Hang on. Did we talk about who? Yeah, we talked about who pays the tariff, the company, but we didn't go into the next level of detail I wanted to go into. We'll go into that hopefully in a moment here. But let's back to what we were looking at. Will it affect me? Which is what, as an individual, you are not only as a business. If you're an independent person, that's going to be a question that you have. And I know when I talk to people have the same question. I think so, right? It's going to affect you because if let's take laptops for instance. I know if it's a great example, but let's take that and maybe let's take toys. Let's take two examples, maybe laptops and toys, kind of different from each other. One is electronics, another one is for children and a plaything, etc. Right? So when you're importing a laptop, it says 20%. The number I believe was higher, and again, they changed a few days ago. Say Dell pays a tariff. I believe Dell imports a significant amount of stuff from China. Just actually rephrase that. I believe it's upwards of 70% of what Dell sells is imported from China, is what I read. Now, again, don't quote me on the number. You can look it up, but it is a sizable number. So Apple, is importing its laptops. They're probably made in China, and a number of them are, a good percentage of them are now being made in India as well, from the town I come from, as I understand, Chennai. So those are laptops that are imported, machines coming into the country. Say you're paying $3,000 for a machine, Apple machine, or you're paying $1,000 for a Dell machine. Say the tariff is 20%. Just take the round numbers. It's easy to do the math. So 20% on $100 would be $20, and $1,000 is $200. on $3,000 is $600 essentially. So for a Dell laptop that's $1,000, the additional cost for Dell that they have to pay is $200. Apple would have to pay $600 for that, for the laptop, for the machine that they're importing. Now, there's many ways this could pan out. Now they could absorb the cost, say, you know what, we're going to absorb the cost and not change the price. In which case, when I go buy a laptop, I'm going to pay the exact same price. When I go buy a machine from Dell or Apple, nothing changes. Or Dell could decide to do act upon this differently than Apple does. There could be variations there, but the highest level, it doesn't have to be. Let's take ceteris paribus conditions where both companies decide not to charge, pass this cost along to the consumer, and they absorb the cost, which means they're going to lose 20% from their profit margin, and that's going to have a direct impact on their security, on their stock, excuse me, and the price. We'll get to that in a moment. It's slightly outside the tariff topic, even though it's related, but keep that in mind. They could do that, or they might decide, you know what, we cannot absorb the cost. We're going to pass the entire cost to the consumer. $600. Now, whatever you paid for the laptop, $3,000, you're going to now pay $600 more for the exact same laptop, $3,600. In which case, yep, it certainly did affect you. Now, you could choose to not make that purchase, defer it to a later point of time, but regardless, it does affect you. Even whether or not you make the purchase or end up making the purchase, the fact that you've changed your decisions, it clearly means that it has had an impact on you. Third variation to this is Dell and Apple could decide, you know what, we're going to absorb some of the cost, 50% of it, $300, and we're going to pass along the other $300. So you don't pay $3,600 for the laptop, you pay $3,300. You don't pay $1,200 to Dell laptops, you pay $1,100, right? There's an increase, but not as much as there was before. That's a third variation. Now, the fourth variation to this is one of the companies decides to absorb it, the other one doesn't, or maybe the amount of money that they choose to absorb varies, which is competition essentially. That's certainly, it's bound to happen. Apple could say, you know what, I cannot charge $600 more because the machine is expensive enough. So I might have to absorb more of those costs. While Dell might say, you know what, it's not, it's $200, it's not 600 like the other company has had to charge or has had to absorb. So I might pass this along to the consumer. But again, an Apple buyer could be slightly higher end consumer, so they might, the $600 that is to an Apple buyer is probably the same impact that a $200 cost increase has on a Dell consumer or a Dell purchaser, just because of the tax bracket that they may end up being in, just if it's not catering to the higher end market. So a lot of that goes into the pricing of these products. So it has an impact on the companies and the decisions that they have to make. And then they're going to decide whether or not they pass that along to you and to what extent they pass it along to you. So you can see how quickly it can get quite complex. That's for laptops. Now, if you go to toys, I don't know, if you take like Lego, or you take I don't know. It's been a long time since we've bought these toys. We have a grown up in the house, but we're buying these dolls and puzzles from Amazon and other places. Maybe say you're paying $50 for a puzzle. Now, if the tariff is 145%, that's going to become like what, uh, another $75, give or take, so $125. So what was $50 has now become $125. That's a big increase, right? That's a pretty big increase. And again, those are products you probably buy more frequently. You're not buying a machine every day or every month or every year, but you might buy a toy rather frequently. And if you have more children, you're going to buy a lot more toys, so it has a direct impact on you. You're not worried about the laptop tariffs on laptops, but you are most certainly worried about the tariffs on toys. And now if you're buying a car, there's tariffs on electric cars. You could have there's tariffs on toasters. A lot of that, the price adds to the cost, right? So essentially, you will be affected. But does that mean, the natural question is, okay, so in which case should countries not charge tariffs at all? Because if you don't charge any tariff, 0%, then there's no cost to be passed along, not to be absorbed by the company or to be passed along by the consumer. So that seems like a perfect scenario, is it? No, it is not. There is a purpose for these tariffs. So that takes us to one of the line items I have here, which is probably somewhere down. Will it affect me? Or did I not have it? Let's add one here. Purpose of tariffs. Right, just like everything, there's no simple or straightforward answer. There is a purpose for these tariffs. You want to protect. One of the main reasons is to protect your domestic industries. Now, I can tell you, as somebody who grew up in India, I've lived most of my life here in the U.S., but I grew up. I was born and raised. My formative years were in India, and I know that my granddad, who used to like to buy these imported cars at the time. I mean, in India, we didn't have too many options at the time when you want to buy a car. There's not too many people who owned a car at the time. It's not like the India of today where things are quite different. But he was fairly affluent at the time, and he wanted to buy these import vehicles. And there was no, it was not it was very uncommon to buy them. Very very few people bought it. You had to go through a special channel and pay a lot of taxes, a tariff. I don't know what the number was, but it was a pretty big number. Like if the car would cost $20,000 roughly, you might pay $40,000 or $60,000 as tariff. So the cost of the car would become $80,000. Now, does it affect the consumer? Did it affect my granddad? It certainly did. But again, you have to understand that the demographic, he was at a point where he could afford to pay that. He wanted to buy those cars. So he was willing to pay for it, and he had the ability to pay for it. So yeah, he had to pay more, but the impact. I mean, it is not like he didn't have to wait for his next paycheck to buy groceries, as an example. So the type of impact was quite different. If tariffs were on bicycles and two-wheelers or two-wheelers, as they call it in India, or motorbikes, that would have had a much bigger impact, because a lot of people in India actually ride these motorbikes. That is the most common form of transportation. At least it was at the time. Probably it's cars now, but it was at the time. So if the tariffs were on those products, it would have had a much bigger impact. It doesn't have to be 300%, 400%. It could have just been 80% or 100% or 50%, but it still would have had a sizable impact, right? So it makes a difference depending on who you're selling it to and what it is what it is you're selling. All of these things play a pretty significant role. So protecting domestic industries is important. The reason India would have charged those tariffs then and probably even now is because they want local businesses to be able to sell their cars or their motorbikes, right? And you've seen, I don't want to make fun of this, but if you want to look up a car that was made in India in 1980 or 75 or 1985, or before I was born, like 70s, they didn't change a whole lot for many many years. So if imported cars were freely available and there were not such high tariffs on those vehicles, people would not have chosen to buy cars made in India. But the government would have had to protect the domestic interests of these domestic companies, so they charged those tariffs. Right? That hopefully explains it. So the next is, again, I'm looking these bullets up, but I'm trying to explain in my own words. Generating revenue for the government. That needs to happen, right? Generating revenue for the government. When you import, and I said when the company imports something into the country, let me actually, yep. So the company imports something into the country, it is paid at the point of entry, as we said earlier, by the importer of the product. So if Apple's importing iPhones, they're going to pay the tariff. But who are they paying it to? They're paying it to the US government. So it becomes a form of revenue for the US government, essentially. So that's money coming in, right? That's the purpose. That is the primary purpose. Now, using that money, the government can do whatever it is that they plan to do, maybe improve the infrastructure, improve healthcare, do a number of things that they have on in their agenda. It depends on the administration, a number of other things, but that you get the point. So generating revenue for the government. And the third item it says here is addressing unfair trade practices. And I'm going to read this line verbatim. Tariffs can be used to counter practices like dumping, selling goods below cost to gain market share, or subsidizing exports by foreign governments. Now, a country could decide to dump goods at lower than the cost price to gain market share. I would have thought, not looking at this, I would have thought it was competition, right? They are able to do it and they can do it, or subsidizing subsidizing exports by foreign governments. But it says they are unfair trade practices. So, there's WTO, the World Trade Organization. There's a lot of rules that define this. Yeah, I believe a free market is how, you have the companies and the industries that dictate and define what it is that they're selling and how much they're selling that at. But that being said, I think there are controls and regulations in place. So a system functions and continues to function. If you let everything be controlled by the free market and by private companies, I believe it may not be in the best interest of citizens of any country, for that matter, is what I understand. At least it's my own interpretation. I'm not reading that out of here, as what it says: unfair trade practices. Negotiating leverage is the last item it says here. Tariffs can be used in trade negotiations as a bargaining tool or as a form of pressure, which is very true, right? We are actually seeing it right now. When we charge a lot of tariffs to countries, they react differently, and then they may be willing to come to the negotiating table and give some and get some, essentially. So that's the negotiating. What leverage do you have? Again, it depends on how big you are as a country, how powerful you are, what are the size of your imports and exports, and a small country in Africa is not going to have the same leverage than, say, the United States of America. As simple as that. So the leverage is very, very important, but it's going to vary seismically. Now, how are these tariffs? The type of tariff. In other words, the tariff, we said, is a percentage, and how it's charged, it gets into the specifics. We won't go to those details. It can be charged on the entire amount of whatever it is that you're importing. Say 10% on this entire shipment, or 20% or 30%. Or let's say you're importing 200 caps or tees or pants, trousers and whatnot, and maybe the tariff is a certain percentage on or a dollar amount on each unit, or a percentage of the price of that unit, and multiplied by the volume of whatever your imports are. So how it happens, again, it could be one of many ways, and I think we've beaten that to a large extent, so we can move on from there. So that's essentially coming back here. Purpose of tariffs, we talked about it. Let's just write it down. Purpose is income for government, negotiating I'm going to say leverage or negotiating. So we said, I forgot what other things. I know we said 4 things. Purpose of tariffs. One was income. Let me look this up again. Saw this quickly. Yep. First one is protect domestic industries, limit unfair trade practices. Right, so those are the items, the purpose of tariffs. Now, the next bullet is, if both countries charge a tariff, the question is, does it not get negated? So the question is, if before we, I think we've talked about the tariff being different for different products. We've talked about the percentages. We talked about trade imbalance, currency manipulation. Okay, I think we're making some progress here. Does it get negated? Not really. I'm going to write the answer here. It's because you say, yeah, there's many reasons why this will not be the case. Let me think. We earlier saw that talked about trade imbalance, right? How much are you importing versus exporting? Now, if you're importing $100 worth of goods and you're exporting $20 worth of goods, and if both countries charge 10%, it doesn't get negated, because you're charging 10% on $100 versus them, the 10% on the $20 worth of exports. So there is a disparity there right away. There's more reasons. Things are never as simple as they seem, is one obviously higher level reason. But to be more specific, that what you're importing, what each country is importing, is going to be quite different. Now, from what I understand, we import a lot of stuff from China. Um, Things that you buy at Walmart, at Amazon, maybe it's regular day, what the things that you need to live your life, run your family, run a household, essentially. You know what I mean, man? Maintain your house, your car, a lot of these things that are just to live life. You need a lot of things, and those products come from China, right? That's just for survival. But from what I understand, what China imports from the US, let's see, what does China import from the US? Let's look at that. China's top imports include oilseed, followed by oil and gas, Other major imports include pharmaceuticals, semiconductors, and aerospace products. Now, again, even looking at these kinds of items like semiconductors and aerospace products, and you saw the other list that I shown, like toys and puzzles and things like that, right? So there are different categories of products. Who is importing semiconductors? Who is importing aerospace products? By who? I mean, what type of companies? They're not individuals. It's not for individual consumption. It's for companies to consume and use and build whatever it is that they need to do. So I know China is importing these NVIDIA chips for them to, improve their AI infrastructure in the coming years. They are a sizable competition to us. A lot of AI inventions happening in that part of the world as well. So there are limits. So we didn't talk about limits. The government places limits on certain kind of imports or certain kind of exports to protect the interests of the country. Now, why would semiconductor chips be? Again, I don't know the right or wrong answer. I'm just sharing my 2 cents on what this is. Now, the reason NVIDIA chips are limited, or they say, hey, you can only export certain kind of NVIDIA chips, less powerful chips, and only certain number units of chips to China or certain other countries, is because you want to protect, you want to be ahead of the curve when it comes to AI and AI inventions. Now, what I personally don't understand is in the context of free trade, why does something like that happen? Now, again, to that, I think I may have answered the question earlier. In the name of free trade, you cannot not take care of your own people. Is probably what countries have to do. Yes, free trade is important, and probably there's more better descriptions and other. I'm sure one of you or more of you can help me here. Free trade does not mean you let people, countries, and companies do whatever the heck they want to do, because then there's going to be dumping, there's going to be manipulation, and all those kinds of things, and that doesn't help bode well for a country and the people of that nation. So here, just to go back to the example, China is importing pharmaceuticals, semiconductors, and aerospace products. That those are different kinds of products from what I believe we are importing. There could be some commonalities there, because America is not a manufacturing country, right? I mean, we don't have too much manufacturing happening here. So it was, I believe, in the 70s, early 70s, from what I understand, it was a ship to other countries, mainly to China. And I think that ship has probably sailed, in my opinion. Now, again, this is a very, debatable topic, I'm pretty sure. Do I see manufacturing come back into the country? Is Apple going to, no matter how much incentives you give Apple, is Apple going to bring back manufacturing? If I were to place a bet, I would say not really. I could be wrong, but that's my hunch, because it's just that going by what everybody's interested in doing, the cost of labor and a number of other factors that come into play, it probably is not economically viable for Apple to build their products here, which is probably why they have factories in a number of other countries. They try to diversify from their manufacturing units, so that it's not just all in one country, predominantly in China. I know they moved a ton to India. So if tariffs happen to be applied equally to all countries, and Apple would suffer quite a bit. But if tariffs are scoped and directed at certain countries, then Apple can continue to build their products in the other countries that they have set up shops in over these years. And I believe they're able to, to meet the US iPhone demand, they're able to build 50% of those phones in India, is what I understand, right? So that sort of minimizes their risk. But anyways, coming back here, the type of products imported into by countries, they're going to be quite different. So if China is importing semiconductors and aerospace products, and US is importing like rugs and bath tissue and whatnot, they are very, very different. That the semiconductor cost is going to be consumed by the company, and it's not really passed along to the consumer directly, not in any way, form, or shape. Maybe it has a ripple effect in other areas, which might end up costing, which might end up having other products cost more to consumers. I don't know, but certainly not directly, if you know what I mean. So, which is why, back to what I was trying to say earlier, even if both countries charge this exact same amount of rate, as far as tariffs are concerned, it's still not going to be negated, because China charging a 20% tariff or 50% tariff on semiconductors is not the same as US charging 50% on bath tissues, for instance. They're very, very different, and the impact they have is very different. So that's important to understand there. So it's a very, it's a complex topic, in my opinion. It's not like engineering where it's binary zeros and ones. So when I hear or see people say it's correct, this is wrong, they should do it, they should not do it, I mean, like, you know what, we can have an opinion, but I'm sure there's other people who are actually in this space, who are more qualified, by economists and folks who are do this for a living, who probably help each of the governments try to come to these conclusions and decisions. So you want to make sure we understand what we know and what we don't know, so we can at least be objective in our opinions and not be biased, which is not good, right? We are a country, so biases are not no good. So uh, I think how is it calculated? I think we talked about that as well. Tariffs on Chinese goods. We discussed this list of products and their tariffs. Okay, supply chain. That's an interesting topic which I've not seen much of, and this is I have a lot of questions here more than answers. So the tariff essentially is charged on the country, the last port of exit. If a bag comes from China, a luxury handbag, the tariff on that product, on that category of products, is charged based on the product, the country, and a number of other factors we saw earlier. But it is charged. The tariff is charged on product coming from China. So the importer pays the tariff that corresponds to that country. But things are not as simple as that. I have to believe in the manufacturing world. Even though a bag, let's take a laptop. Even though a laptop is coming from China, maybe the display is coming from Vietnam. Maybe the keyboard's coming from Malaysia. Maybe I don't know. Maybe the chip is coming from some other part of the world. Maybe from the U.S. Right? Maybe they're importing something from here, putting it together, creating some of their own material, and then the end product is exported back, to exported to the U.S. Now, even though it's coming, the port of last port of exit was China. It actually, the supply chain is a lot more complicated. It comes from a lot of different countries. That's what makes this even more complicated. Now, again, from a country standpoint, you can, as I understand, only tariff the end product. You're not tariffing. There's no such word. Sorry, you're not applying tariffs on the ingredients or the components of that product or ingredients of a food item. It's just not possible. So I don't know what that means, because when you're applying 20%, 50% on a country, but the country's maybe doing an assembly, or doing a majority of the work they're doing relates to the assembly of that product, but they are sourcing from n number of other places, you're still ending up, the tariff applies to the country. So I don't know what that actually means. I just want to call it for that supply chain and the complexity of that supply chain. So let's just make a note here: supply chain and product tariff is on end product based on port of exit. Product comprises of parts from various other nations. That's what I want to call it for. I was looking for something, but before you go there, actually, I forgot to mention one thing about trade imbalance. Let's go back there. When we talked about trade imbalance, you say, hey, I'm importing $100 worth of goods from a certain country and I'm importing $100 worth of goods from a certain country, but exporting $20. So there's a trade deficit of $80. And then they have a trade surplus because they are actually doing more more exports than imports. But vice versa, we have a trade deficit. Now, there is bound to be trade deficit from what I understand. There cannot be trade equality, if that's the right word. Because, I was looking up a small country in Africa, I forget, where I believe we import cocoa, the cocoa beans from. Let's actually look this up because I'm curious. Cocoa beans in Africa. I know it's West Africa. I guess it's Ghana and maybe is that a different country? I'm going to mispronounce even the name, but I believe it's Ghana. I thought that was on Ivory Coast. Yeah, I think I know Ivory Coast. So let's say Ivory Coast. U.S. imports from Ivory Coast. So it says U.S. imported just $1 billion worth of goods from this other country. It seems like sounds like a French name. I can hardly pronounce English words. It sounds like a French word. I'm not even going to try pronouncing that. Okay. It says U.S. imported $1 billion worth of goods from Ivory Coast. U.S. exports to. Oh, that's actually not pretty. That's pretty comparable. Um, because there's not too much difference there. But I want to take a different country. U.S. imports from, I don't know, Sudan. Oh, it's only $13 million. I'm gonna let's take some other country. Congo. Okay, it says this. These are really small now. I want to. I know there's a country where we import a fair bit, but they don't import anything from us, or it's negligible. It's because that country is a very poor country, so they cannot afford to actually import anything from the U.S. Just not enough per capita income or disposable income to facilitate that. That's one reason. Two is what you need from a country varies. And I'm going to take an example. I found a good example here of say, Indonesia, right? A beautiful country in Southeast Asia. It's in a large archipelago, right, of a lot of islands, and they have, rubber and oil palm and coconut and all that kind of stuff. So, America, I'm pretty sure, I think we import a number of things from Indonesia. So let's see what imports from US imports from Indonesia. Says US imports $28 billion worth of goods from Indonesia. Now, let's say US exports. It says $10 billion. Yep. So it's one third, right? I mean, there's been bigger differences from in other places that I've seen, but this is good enough a number to make the point I was trying to make. One third. So there's going to be a trade deficit, right? That's, if I understood trade deficits correctly, it's $18 billion of trade deficit right there. Now, in totality, the number itself is much smaller. It's not, you're not talking 400, $300 billion like it's China, from China, but it's still, if you take that number, there is going to be a discrepancy, and there's no way Indonesia is going to be able to import as much from us as we are able to from Indonesia. So that imbalance is going to be there. I think it's just the nature of the beast. So that's the part I don't understand, what it means to have trade equality. So I think that's just my opinion. Tell me what you think. uh, every country, you import what you need from a country based on the geographical location of that country, what climatic conditions they are subjected to, what they're able to produce, what the people are skillful in. A number of other things play a role, and based on your needs, and you import those products. What they import depends on their affordability, their needs, and what we are able to produce. So there's never going to be true equality there, and I don't know what it means to aim, if there is such a thing as aiming for true equality. So there is going to be that disparity, at least in my opinion, right? I just don't see any other way out. So that's one point. uh, and we talked about the other, we talked about importing from a certain country, but it's just assembled in that country, or it did further to create that laptop. It actually was uh, it depended on components from other countries, right? If it's shipping a food product, maybe it's sourcing those ingredients from different parts of the world, putting it together, and then shipping it to the US, and we charge a tariff on that country. So it's the port of exit that plays a role. But it's pretty complicated because of the supply chain that we quickly, we sort of quickly alluded to earlier. um, that's true, I want to believe, when you export as well. When you're exporting something to a certain country, it may or may not be that country that you're exporting that stuff to that ends up being there. In other words, I think I read somewhere that when you're exporting to Singapore, uh, Singapore is a small country in Southeast Asia, 5 million people, right? It's a developed nation, a beautiful country. But they are only 5 million people. They cannot consume everything that they're importing. They're probably a port of entry for things that are being imported into in that part of the world. They have a very busy port, and then they're probably shipping it to other countries. So even though they are importing the product, they are not the end consumer of that product. So if the tariff, whatever the tariff is to Singapore, the tariff, they may or may not be particularly pleased. And I saw the prime minister or president. There was a pretty good speech about how his opinion on the current situation. So they import something, and then they ship it to other countries. Now, when you export to Singapore from the US, you are subject to a certain tariff. And I know maybe Singapore doesn't even charge a tariff to the US, from what I read. I may be wrong. But if they did, uh, they have to be cognizant and aware of their consumption, right? So it's more complicated, right? Just because you're importing from a certain country does not mean that's where the product was truly made, because the supply chain is more complicated. On the flip side, when you're exporting to a certain country, it does not mean it's consumed in that country. It probably is consumed by people in other countries, so it's shipped out to other countries from Singapore. So how does that affect trade? Because Singapore relies, I believe, extensively on trade, given that they're pretty small, but they're in a very important part, geographically located at a very important part of Asia, right? The sort of middle point where goods are coming in and going out. So what does it mean to Singapore? How do they react to these tariffs and whatnot? So that is most of it. But let's also talk about the negotiating power. Part of the reason for the tariffs and applying, for the size of these tariffs and the countries they apply to, may not be just the products themselves. It may be revenue, it may be something, but it may be a lot more than that. We saw the factors as to why a country would want to charge a tariff, but those are objective, but there could be subjective reasons. What if you want to have some leverage, and we have other issues that you're dealing with in other countries, say. There could be a plethora of issues that you're dealing with that don't exactly have to do with the economics or products and trade. Maybe it's other geopolitical issues that you want to have certain negotiations over, and then tariffs could be a way of doing that too. I'm quite certain it probably is. And that becomes even more complex. Now, we're not just talking products and goods and services and categories and percentages. It's actually well above a lot of our pay grades, which is geopolitical decisions that play a role into the definition of who you are going to apply charge these tariffs to, and what those tariffs are actually going to be, right? So you kind of get hopefully get the drift there. um, I think we've talked, I think everything I wanted to cover about tariffs, I think I did. But I want to end this podcast with the impact to markets. It's we are at an hour actually. I'm not sure whether I can do that in this podcast, but you know what? I was going to do it, but let me do it, because just splitting this into a different one might it takes. We have a pipeline to publish this, and it takes a little bit more effort to publish two than one, obviously. Uh, Okay, impact to markets. Let's look at that, right? Now, if you're an investor in the stock market, you probably, unless you're living under a rock, you probably have been subject to the fluctuations of the market. We can pull this up really quickly. Let's go to, let's look at Dow, the last 1 month, or let's look at the year. You see all of this that's happening here. April 2nd, it was 42,000 points. It plunged to 37,000 points. It's 5,000 points. I think it was like 12% or so. In the last month, it's dropped 5. But because it's caught up quite a bit, it had. But I think it had dropped more than 10%. Now, there was sizable impact on the market. You can look at each security and see the price. And we can probably have a more detailed conversation about this in a subsequent podcast. Now that I think about it, I probably need the energy to do it. So let's do this. Let's talk about impact to markets, the stock market, the bond market, the correlation between the stock and the bond in the stock markets, how all of this plays out. I think it's actually a fair thing to split this, because that has it is tariffs have sort of caused that ripple effect, but outside of that, it's a separate topic altogether, right? That's it. This tariff is just the entry point to that topic. So I think it'd be interesting to talk about that at least the same length, hopefully shorter, but at least when I have a bit more energy. So I think that's essentially it for tariffs, right? So if you came again, verify all of this. Everything I've shared with you is my understanding, my interpretation, and I'm not in the business of economics. Snowpal is a software company. We build software. We have B2B and B2C products. Definitely check us out. And before I end the podcast, I think I should just do our company justice by taking you to our homepage here. Go here and you can check out our APIs. If you're building something, mobile apps, web apps, microservices, don't waste time reinventing the wheel. We have 8 APIs with 1,400 endpoints. 1,400 endpoints published on AWS Marketplace. You can just subscribe to it. You start consuming, integrating those endpoints in 5 minutes. If you're an AWS user, If not, it'll probably take 10 minutes, not more than that. Or you can purchase the licenses from us for like $3,000 a piece, or we can work with you and come up with a model that works for you as well. So that's APIs on AWS Marketplace. Definitely check us out. There's a lot of APIs here. Here, we have an education platform where we publish courses. Oops, I'm not sharing my screen. That's not going to be helpful. Okay, so I was here earlier. This is Amazon APIs, AWS Marketplace. Just check out our APIs. You can click here, go and subscribe to it. It takes no time, and you can start developing. Products.snowpal.com is our homepage. You can go check out our courses. We offer very affordable courses. $10, price of less than a lot of them are like much less than $10 actually. So it doesn't break your bank, and you can learn about finance, economics, but mostly about software engineering. Our podcasts are here, and you can download our mobile app from the App Store or Play Store, or you can essentially use our and I should say not our use our project management platform to actually manage your projects at work, home, and everywhere else. That's as much pitching as I'm going to do here. That's about it. Again, last but not least, verify all of this, but hopefully you had some takeaways and some amount of learning that you probably didn't have prior to coming to the podcast. But that's my hope. Let me know if you enjoyed it, or if you want to know something more. I'm happy to follow this, have more conversation with somebody who's more qualified than me in talking about this. If you came here looking for content that's at John Oliver's quality, I can help you. I don't think it's my fault. It's yours. Just kidding. But hopefully you learned something, in the last 1 hour of being here with me. That's it. Until next time, thank you.